welcome back the Chairman of the House Financial Services Committee, Representative Jeb Hensarling. Mr. Chairman, thank you for your patience. Thanks for joining us. We always appreciate having you on.
No, you're welcome. Glad to be here.
I mean, this goes back to something, a provision in Dodd-Frank that would create this vice chair of, what, oversight and regulation, and that person hasn't been designated yet, so you want
Correct.
Janet Yellen to fill that position in the meantime, right?
Well, correct. In many respects, this is not your father's Fed, and whether you're a Fed admirer or a Fed basher, their powers have been vastly increased beyond their monetary policy powers in the Dodd-Frank Act. One little attempt to show some accountability in Dodd-Frank was that the president was to appoint a vice chairman for supervision for their role over now huge swaths of the economy. Again, this is separate and apart from monetary policy, but 5 years later, the president's never filled that position, so Congress has not had the ability to have the formal hearings twice a year as Dodd-Frank mandated. So myself and Senator Shelby, the chairman of the Senate Banking Committee, are simply requesting that Chair Yellen start to fill in the role. I don't know why it's taken the president 5 years and he still hasn't acted. But again, the Fed has had their powers vastly increased due to Dodd-Frank, but the transparency and the congressional accountability and accountability to the American people has not commensurately increased, and it needs to.
Chair, I would note that a lot of the questions already do seem to revolve around this when Chair Yellen does appear. But just to be clear, would this be a patch? In other words, as soon as the position's filled, you wouldn't expect the Fed chair, whoever he or she is, to continue to appear more often? Or would you like it to be that the Fed chair is the person who we do hear from more frequently on these issues as well?
Well, this is one more instance where we wish the president would actually follow the law. I don't know, again, why it's taken 5 years. I do think that the Fed should be testifying before Congress more often. People often interject, questions about independence. I would note that the Fed chair apparently has a weekly meeting with the administration and by statute meets with Congress 4 times a year versus a weekly meeting with the administration. And so particularly when this is not your father's Fed and we have this kind of gray area between monetary policy and fiscal policy, when we're sending so many seniors out on the yield curve, interest in a historically long, artificially low interest rate environment, the Fed needs to be accountable. I want them to be independent in the conduct of monetary policy, but they need to pull back the curtain and let the rest of us know what they are doing. And so, number one, independent from their supervisory role, where again they are now in charge in many respects of dictating what happens in large insurance companies, maybe soon asset managers. So we need more testimony on monetary policy, but right now we're just asking that the law be followed. And if it can't be followed literally, if we can't make the president follow it literally, figuratively we want it followed, and we need the Fed chair to come and testify on these supervisory matters. And it's just Congress doing what we're supposed to do, and that is our oversight.
And as you know, Mr. Chairman, not all of Dodd-Frank has been implemented yet. It's still being formulated right now.
Oh, I know it better than most.
Yes, and I mean, I think of the Volcker rule, for example, which has been, kicked down the road. What's taking so long on that, and do you expect it to be eventually introduced?
Well, I think the Volcker rule is incomprehensible to the mind of man, the only way I think to implement it is to have, Dr. Phil at your trading desk to ask you what were you thinking and what were you feeling when you made this particular trade. But put that aside, I mean, Dodd-Frank is a completely complex piece of legislation. The sheer weight, volume, complexity, uncertainty of this load on the financial institution. There is a reason that we are mired in essentially 2.5% GDP growth, and I think Dodd-Frank has a lot to do with that. And that's one of the reasons the Fed, for example, in charge of the implementation of the Volcker rule, they need to testify before Congress, and they need to tell us what's happening, for example, to the liquidity in our bond markets.
To what extent can you just compel the Fed chair to appear more often? I mean, are you doing this as a gesture of deference to some extent to them, or do you have no power to bring them more often to press them on these issues?
Well, again, we want to be respectful of the Fed. I want to be respectful of the Fed chair, but I would remind them that the Fed is a creation of Congress dating back to 1913. Within our constitutional power is the power of oversight. So we are making a formal request. I would see no reason why the Fed chair would not comply. If she doesn't, then we're going to have to cross that bridge when we come to it.
Last question for me, at least. I know that you'd rather just see Dodd-Frank go away in its current form. It's way too complex, it's way too far-reaching, but yet the climate, anecdotally, we hear on Wall Street hasn't changed a bit. You know, you still got the currency manipulation charges that have been settled just
very
recently,
serious
so
charge.
billions of dollars of fines are being paid there. We just had a survey out yesterday that suggested that people on Wall Street are still witnessing unethical behavior out there. If regulations can't do it, how do you change the climate on Wall Street?
Well, again, I think it goes to the fact that Dodd-Frank on many levels hasn't worked. It's been a huge burden on the economy, and low and middle income people are suffering. It was a law supposedly aimed at Wall Street, but it has failed. Well, I think number one, what we need is high levels of capital, prudent levels of leverage. We need greater transparency. As you know, a lot of these vehicles that were used before the crisis were off-balance sheet vehicles. In many respects, the regulators didn't do their job, but there's no substitute for having the appearance and reality of your own money and risk, and having a very competitive, transparent, innovative capital market that's vigorously policed for force and fraud and deception. But we want robust capital markets, and we need greater economic growth. And yet what we see is, after almost 5 years of the passage of Dodd-Frank, the big banks have gotten bigger, the small banks have become fewer, and middle income people are falling further behind. I'm not sure there can be a greater indictment of the law than that.
We'll leave it right there, Congressman. Thank you so much for being here.
Thank you, Mr. Chairman.
Thank you for having me.
Chairman of the House Financial Service Committee.